Welcome to this morning's webinar. It's lovely to see so many people online this morning. For those of you who don't know me, my name is Crystel Rynne and I'm the Chief Operating Officer here at HRLocker. Today, I'm delighted to have Neil McDonnell with me, who is the CEO of ISME. So Neil, thank you so much for taking the time out to talk to us about all things key employment law changes for 2025. It's a mouthful. What to expect with employment law and budget changes. I'm really delighted to have you with us today. Neil, I suppose if we just go from the start, we'll go through today about try to make it practical in regards to the labour cost changes, tax changes, what opportunities they are. So hopefully we kind of turn it around and give you some opportunity to talk around sustainability and efficiencies and simple ways for preparing for 2025. So Neil, I suppose if you want to just maybe introduce yourself to everybody and a bit about your background and a bit about what ISME does as well.
Well, thanks, Crystal, and hello, everyone. I'm Chief Executive of ISME for the last 8 years or so. We are a multi-sector trade association representing micro, small and medium enterprises. As a cross-sectoral association, we also have within our membership various what we would call vertical associations that look after their own memberships, such as hairdressing, health stores and retail, nursing homes and childcare and so on. So we would be services heavy, and we would be micro and small businesses heavy in terms of our membership. So the issues you're talking about today, Crystal, are very, very close to the bone for most of the businesses that we represent.
Yes, and I definitely agree with you, Neil, on that. When we talk about the minimum wage, I suppose for a lot of companies who are in a broader, perhaps professional services or tech, sometimes the minimum wage, we don't really see it affecting us that much. But if we talk about the minimum wage rising to €13.50, correct me if I'm wrong on that, for January 2025, you're going to see a significant increase in labour costs, even though there is kind of that age-old debate whether we have an increase in regards to living costs. But now we're going to see a massive increase in regards to labour costs. So I suppose what in terms of companies actually looking to balance that while still remaining competitive, how do they look at, should they be looking at productivity improvements or process optimizations? Because it is coming in January regardless.
It is, and just taking, before I answer that, Crystal, I think the frustration for small business was that the research government did on this prior to decision on the big shift last year, which was the 12.4% change, that was driven by research from Maynooth University, which completely missed the so-called spillover effect. Now we have been negotiating with the Department of Enterprise for 2 years on this. It was October 22 when we said there will be a massive spillover effect from this living wage. And the minimum wage, even though the vast majority of our businesses don't pay the minimum wage, the minimum wage does benchmark wages. 2 years ago, we were saying it benchmarked wages up to about 30,000 a year. Now we're saying it's benchmarking wages up to about 35,000 a year because the change has been so significant. So we have a lot of labour intensive businesses, services, manufacturing, childcare, nursing homes and retail, and productivity is absolutely going to be key to that. Now, a lot of businesses can't make direct productivity changes. For example, childcare is a ratioed service. You have to have a certain number of childcare carers to children. Similarly, for nursing homes, it's a HICWA regulated activity, but certainly back office activities can be made more efficient or can be removed altogether from outside the business. But secondly, we would say, you need to be very proactive on this. So businesses that provide services on a B2B or a contracted basis need to be talking to their customers, whether that's a government agency or a large business, and say, government policy is going to change the price of my service. And ideally, you should have an escalator clause built into any service contracts to cover that. I'd also say, and I know you're going to go into working from home and things like that, but the movement in labor cost has been so significant in the last couple of years that a lot of businesses will be looking at those labor services which no longer need to be directly contracted and perhaps can be bought in from a third party contractor such as yourselves, or indeed from outside Ireland or Europe altogether.
Yeah, and I suppose when we look at just over the last 12 to 24 months, and also the future times we've had sick pay increases, we have the pension contribution, which will have to be factored in, whether it comes in September next year or whenever it comes in. But I suppose if we're looking at January, people will need to start factoring in increase in wages, increase in mandatory sick pay, increase in pension, which is a huge amount for companies, whether small or large, right?
Absolutely. What we have seen as a trend over the last 5 years or so, certainly in the last Fianna Fáil, Fine Gael Green administration, is a movement of what we would call the social wage. Those supports that exist outside what you take home in your payslip, and what previously was effectively delivered by the Department of Social Welfare. We have seen an element of that migrate to the employer's account. And specifically, you mentioned, we've mentioned obviously the change in the minimum wage, but statutory sick pay. We've had an additional bank holiday. We have increases in the broad range. I know that people get confused talking about parents' leave and parental leave, but leave entitlements for parents, domestic violence leave, and so on. There is a migration of responsibility from the exchequer to the employer, and employers need to budget for that. Now, there was to have been an increase, for example, in January in statutory sick pay. That's gone to regulatory impact assessment. But the one thing that isn't moving, and we now have a date from Minister Humphreys, that is September 2025 as the beginning of auto enrolment. So you need to be budgeting in for a 1.5% payroll cost from next September, which over the following 10 years will go to 6%. And that's going to be a very significant adjustment in labour cost, which unfortunately the employee is not going to recognise as beneficial to them. It's just like employers' PRSI going up. The employer is paying more to employ someone, but the employee doesn't feel it in their pocket.
Yeah, and I actually think that regardless of explaining to the employee that you're not the one who's taking the money for their pension, or not the one increasing their PRSI, unfortunately, you're the one delivering the wage packet that's less. So there is some income tax credit increases that are coming, that are here. And coming in for 2025, it's 125 rise in the personal and employee credits. The USC is dropping from 4% to 3%. So there will be some kind of increase in regards for people on a lower wage from a tax perspective. Do you think that will kind of negate the other side of things, that where there's increases in other places, that there could see some positive impact on employees' take-home pay?
Yeah, it does. First of all, of course it does impact take-home pay, and we will see at the lower end. Now, unfortunately, this is an area where the progressivity of the Irish tax system means that actually there's very little tax benefit that can flow to employees making less than €20,000, for example. So that would cover an awful lot of part-time employees, they won't see any benefit because effectively they're paying no tax. The USC changes will make a difference. We're always very cautious about recommending things like that because our exchequer is already extraordinarily dependent on two sources of income, one being corporation tax and other being income taxes on workers earning over 60,000 a year. So although it's popular for people to come out of the tax net, it's very dangerous for the exchequer. Two things for employers to ensure that there is a morale effect for people is, first of all, within the HR function to say to people, did you know? Because there are a lot of people, you and I, Crystal, may interrogate the budget outcome and all that and see what does this mean for me. An awful lot of other people don't. So to say to people, did you know that your take home will increase by X from the 1st of January? To make people aware, for example, if they haven't submitted a tax return for their medical expenses, send them a link. We're not suggesting that employers would do that, but let people know, how they can benefit. And then there are other things like, for example, the small business exemption is going from 1,000 this year to 1,500 next year. And employers can pay that out instead of the two €500 tranches this year. It can go to 5 €200 tranches next year. Again, unfortunately, employers, from the research and contact we do, eaten pie is soon forgotten. They don't necessarily get that. That's not necessarily appreciated by staff, but it is available and it is tax efficient. And most particularly for those employers who are under a lot of payroll pressure, the use of the small benefit exemption is a very tax efficient way to deliver some extra money to your employees.
Yeah, and actually, you know what, I love the idea. I hadn't thought of that before in regards to just telling people how they can claim even their remote working expenses or their medical expenses, because I tell you, I can't believe how many people I've spoken to who don't claim those expenses or don't even know that and I know it's only a small amount, but at least it's something. So at least you can point them in the right direction, which is a great idea. Sorry, and just I actually didn't say this at the beginning, but we do have the questions and answers section open for anybody who wants to pose a difficult question for Neil. I'll put them on to him. No pressure. And it's around, please, if you think of a question, just drop them there. But I do always think in these situations when things are changing, over communication is always better than no communication. And like you said, a lot of people, I'm sitting there reading the budget, I don't know why, and they might not realize that something is changing in their pay packet. Or I always think with the pension side of things is that I know in your early 20s, you're not really listening to the fact that it's tax efficient and everything else, but it is a good way to explain to people that's a good thing to do. So there has been positive news in regards to major investment for the Future Ireland Fund. So we're talking billions in terms of infrastructure and investment, both in terms of the climate and in future training. What kind of opportunities have you seen or are seeing coming out of these investments for SMEs specifically?
Well, the two funds announced in the budget are actually going to be funds for the state to invest in, and unfortunately, because first of all, the structure of those funds is extremely tightly controlled. The Future Ireland Fund and the ICNF fund, they're not going to be. They won't take risk or equity shares in anything. However, what we do see, and I would direct people into something that we have been dealing with the Department of Enterprise over the last while on the National Enterprise Hub. And anyone who Googles neh.enterprise.gov will be drawn to it, or just National Enterprise Hub. And if you put in green supports or business supports, you will see a series of increasingly more sensible business supports. Unfortunately, the green agenda has been oversold as saving money to business. And we've consistently said to the Department of Enterprise and the Department of Finance that, the payback time for green investment is considerably longer than the 2, 3, or 4 years that unfortunately some vendors of, say, solar PV or water pumps or insulation will represent. We understand that realistic payback times are in the 7 to 10 year region. But the state has actually recognized that, and now we have the Future Growth and Sustainability Fund, which is 7 to 10 year money at very good rates. They're the sorts of funding areas that businesses should look at. There is also grant assistance. The SEAI, the Sustainable Energy Authority of Ireland, is also a really good source of information. And for businesses spending more than €10,000 a year on energy, they can avail of a free energy audit. So you'll actually get a consultant to come into your business who won't charge you anything once you can show an energy bill greater than 10,000 a year. So they're the kind of supports that are available to businesses now, and we strongly, not just for climate change reasons, but also because we have an increasing amount of EU regulation called the CSRD and the CSDDD. This is these are EU regulations which are going to ask businesses to reveal their contribution to the climate change agenda and to show what measures they're taking to mitigate that. Officially, SMEs are exempt those, at least for the next couple of years, and it will slowly come down to the medium and then into small businesses. But what businesses are going to find is that either government departments or large businesses they're transacting with are actually going to ask to see their credentials. So it is, even if this is not a right now discussion for business, it is going to be forced down your throat later on. So we would strongly advise businesses to avail of those green agenda and decarbonisation supports that are available from government now.
I'm actually really glad you mentioned the CSRD side of things, Neil, because I'm tired of telling people that even though you are exempt from it, you are still in somebody's supply chain, and you're going to be expected to provide it. And I was actually at an event maybe a year and a half ago where it was basically saying if you want any grant aid funding or any investment, you're going to have to show your reporting, even if you're not actually part of the cohort that are required to report on your CSRD. I know you guys do have a skill net. I think at this stage I should be being charging skillnet for saying these. But I actually did the climate action, these sustainable climate leadership program through skillnet, and found it excellent just in regards to understanding what your CSRD is, what your ESGs, what all these lovely acronyms mean, and how you can start embracing it as a small business. And I definitely think it's something for companies that they should be looking at now, so that you're not left behind in a year or two's time, right?
Yes, and the two of them are going to be very onerous on businesses. Yes, you correctly point out, Crystal, that the government supports are going to become extremely difficult to access without demonstrating performance in these areas. But even for, say, a small electrical or plumbing contractor contracting with a large building main contractor, they're going to be asked to show their policies in this regard, and there is help. There is help available for them. The CSRD looks internally at what you're doing and your ability to demonstrate that to third parties. The CS-D, the due diligence directive, looks externally and asks you to effectively audit or measure what's going on in your inbound and your outbound supply chain. So it looks beyond the performance of your own business into the performance of those businesses you contract with. So these are very onerous requirements. There is support available, but the key message is don't ignore them or hope they'll go away, because they won't.
Yeah, and again, it's EU driven, so it's not going to go away in the short term. So I just have one quick question here, which I know the answer to, Neil, but I'll throw it to you. Is can we still claim on broadband, heating, etc., from those still working from home, or has this stopped?
The actual direct, I know it is tax allowable.
Yeah, I think the only
this is for the employee, isn't it?
For the employee, and I think the only big difference here is that Revenue have introduced a very annoying app that you can no longer put in just a figure. You actually have to take a picture of your bill and upload it.
Yes, and they do also ask you to specify the number of days that you're working at home. And we would just say to both employers and employees to be careful here. If an employee is not getting a work from home allowance,
Yes.
And is claiming they're working from home for 5 days a week and looking for the max allowance, I haven't heard of anyone getting audited for it yet, but I would advise people just to be careful. But it is an allowance at your standard or marginal rate of tax, depending on where you are on the income scale.
Yeah, and I actually would say to everybody who works with us, I'm always telling people, make sure you're claiming it. It's not a huge pile of money, but make sure to claim it isn't so difficult. People should be doing it through their PAYE. But to your point, Neil, you can't get both. You can't get your claiming from home as well as the allowance from the employer.
Yeah.
So we spoke about this briefly. Lots of changes in regards to parental leave, parents' leave, which I will get mixed up constantly. Increase in statutory sick pay, again, whether it be increase in January is kind of up for grabs at the minute. Automatic pension enrollment, lots of policies and procedures in regards to your CSRD, your ESGs, things like that. I suppose what can SMEs do other than just factor these into their budget for next year in terms of being kind of proactive in regards to kind of taking these budget increases and planning for them?
Yeah, again, there are important differences between, say, broadly generalized, say, an office business, and then a lot of the service entities that we represent. So, when statutory sick pay came in, the government mantra was this is a contingent liability only. You don't pay it unless someone is sick. But the Department of Enterprise is now directly surveying businesses because this is seen as having an immediate impact. So it turns out, surprisingly, if you provide the benefit, people will avail of it. And that is what we are seeing in retail and in childcare and in nursing homes and other services. So the first thing is, yes, budget for it at your, we're assuming that people are tracking both their annual leave, which they're required to do under the Organisation of Working Time Act, and your sick days, and you must provide in budgetary terms for that on a go forward basis. You must also in those businesses where we have a known level of expenditure now in those service businesses, where you are providing, for example, a ratioed service like in childcare and nursing homes. You're not just paying the sick pay, you are paying the replacement labor. So you have to have a very clear understanding about your labor cost as a percentage of your overall cost of sales, and you must make that double provision when you're in the service business. Um, we would also say now that, and I am conscious that the increase has been parked for at least a period next year. I suspect that that will change as soon as we have a new government in place. But you do need to manage sickness absence. The fact that there is 5 or 7 days statutory sick pay does not mean that someone who has 20 or 25 days holidays should just be bolting those on as an assumption. And in particular, if you see an emerging pattern of Monday sickness or sickness that immediately follows every Manchester City match, then you may have an issue with management of sickness in your business. And we would say, irrespective of statutory sick pay, you need to manage your attendance at work.
Yeah, and I would agree with you that a lot of these policies and procedures you need to just start to review. One thing you said there was really key as well, is that it's not just the sick pay that you're paying, it's the cover. You're now paying for two people, so that becomes onerous on the employee. Just in regards to so a question in regards to the pensions, I'm not sure what whether you'd have an opinion on this, but I know myself, I'm being inundated by pension suppliers at the moment, that it's a better option to bring in an external pension supplier rather than going on the government funded pension. Is that something that companies should be looking at the moment or exploring?
It really does depend on where someone is on the income scale. The AE is likely to be attractive to people on or just above the minimum wage, but it is important to remember that unlike a PRSA, at the moment the government is not proposing, which is which makes it relatively less attractive compared to a PRSA, that the employee contribution is going to be tax exempt. So PRSAs are what we call EET. The contribution is exempt. The appreciation in the pension fund is tax exempt, and you're only taxed on exit. With auto enrollment, it's going to be taxed income that you're putting in, so it is going to be relatively less attractive. And at a certain point on the income scale, employees are going to say, I want to opt out of AE and I want to take a PRSA instead. The most important thing we would say to employers is pensions is a regulated activity. Even in relation to we understand there's going to be a very narrow range of options for AE. We would strongly be suggesting to businesses, that when AE comes in, if an employee says, well, which should I take, the default option or something else, you just say to them, that's entirely a matter for you. There is a real danger that if employers are seen to give pensions advice and it goes the wrong way for an employee, the employer could be held liable. This is a central bank regulated activity, so we are developing scripts for businesses to give to their employees in this regard, but you're not going to be able to give informed pensions advice to your employees. You're just not allowed to do that.
Yeah, and I actually think that's key, and it came up when we were talking about the different leave types as well. The domestic violence leave type as well, is that nobody is asking you to become somebody who can give advice. You're just facilitating it in the same way, right? So, same as your pension, you're not, I don't think an employer should be giving advice whether you should go to the government one or a PRSA. You can give the information and they can go talk to somebody, but that's as far as you're going.
Absolutely, and the way in which, for example, the WRC has been seen to be very interventionist on this in the past, it will be interesting to see If there are claims taken to the WRC by disgruntled employees, if they feel they've been given a bad steer or something like that, will auto enrollment come under the scope of the WRC, for example? Under which act is it going to be delivered? So we'll get a handle on it next year. But in the meantime, again, this is an area where the employer can facilitate employee learning, but can't deliver that learning themselves.
Yeah, and that's actually one of the questions I have here is it better to start a PRSA before the AE? Is I would go and go and speak to somebody and get advice, right?
Absolutely. There is, if someone is walking up to the person in HR, the person in payroll and saying, I want to know,
Yeah.
that's a really, really dangerous area to get into. So just don't. And I know employers always want to help people and be nice and give them a hand, but you have to understand that you would never give someone legal advice in a purchasing a house or writing a will, and you're into it because you're not a lawyer. So this is exactly the same. You're entering a central bank regulated activity. You may not give advice. It's really important for employers to know that.
Yeah. The next question is, what is the change to parental leave coming? So it's going from 7 weeks to 9 weeks in January, is my understanding, Neil.
Yeah,
Good.
and again, I'm pretty sure that's an unpaid entitlement, but
Yeah.
most particularly for those service businesses, if you're doing childcare, if you're doing nursing homes, but also if you're retail or grooming services or things like that. The first thing is to try to know. Someone, um, an employee who is about to become a parent, what we'd suggest is just a friendly conversation at the earliest possible opportunity. Understand what that person's intentions are when this comes up and plan accordingly. It's realistically, we're at full employment. It's going to be too late if that person comes into you having given you their notice and says, I'm off. So, assume that someone is going to avail of their full entitlement, plan accordingly, and put an operational and a HR plan in place to replace that individual.
Yeah, and I'd agree. Just over communication, right? It's not a secret. What are you planning on doing? The next question is, when will the 6% for pension contribution come into effect?
It 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 I can't remember the actual milestones on the way, but it is set out in Minister Humphrey's AE legislation that we crawl up to 6% in 10 years. So on the assumption that there are no speed bumps or hurdles next year, with introduction of AE at 1.5% in September 2025, then the employer can plan on a 6% deduction by September 2035. And they need to treat that in exactly the same way as they plan for employer PRSI now.
Yeah. It's just important, I suppose, that you're just putting these into your budget. I have a very controversial question. I'm not sure what to ask, Neil, is with all these increases, how is Ireland going to remain competitive? That might be something over a few points, maybe.
Well, but it's an entirely legitimate discussion, and in terms of pre-tax wages. I know this is a very emotive issue, and we lobby every year on the minimum wage. But in terms of gross wages, Ireland is pre-tax. It's the second or third most expensive labour cost in Europe. Only Denmark and Netherlands are ahead of us. But from our point of view in little old Ireland, Netherlands and Denmark border the largest economy in Europe, and they just cross a seamless border to get there. We're now, our only land border is with a jurisdiction that isn't even in the EU or the customs union, or the single market. So we really do, in the long term, have to consider especially in labor intensive service businesses, what competitiveness looks like, because it is going to matter. You've heard on the radio this morning about our construction productivity, for example. That's a very labor intensive business. And if we, for example, have builders or builders contractors coming across the border at A, working more productively, and B, working at lower wages than us, we can expect a market adjustment in how our businesses get on.
It is. It'll be an interesting space to watch. And we haven't even spoken about AI or anything like that, or working from home much, or bringing people back to the office. And there's still lots of hidden costs in all these future developments.
Yes, there are. Well, and working from home is another
webinar.
emotive discussion at the moment, and there is talk that some of the American multinationals are taking a lot of people back. We wouldn't say that there's a direct read across into everything at the moment. Businesses that have traditionally had there are businesses that pre-pandemic had a lot of working from home, including service businesses like Shopify. A business that can manage a really significant amount of work from home or hybrid input is probably a business that in the long run is going to buy in those services from outside the country. So this could be a two-edged sword for employees as well. We'd advise all businesses to look at their total cost of sales and what the labor input is into that, and to understand which of those services can be bought in rather than made in-house.
Yeah, I'd agree. Neil, so lovely speaking to you. I suppose the best place where I'd steer people is to go to the ISME website. I know that we've used the ISME SkillNet, as well as going to the events. I find, from somebody working from home, going to networking events is a great way to meet other like-minded people and figure out you're not the only person who's talking about sick pay for next year who's read the budget. So best place for people to look for ISME information is at the website or LinkedIn page, Neil.
Yes, it is. We've a good presence on LinkedIn, on our own website, isme.ie, but also ISME SkillNet. And a key message, given the amount of time you spent talking about upskilling and training, Crystel, is, if you're not availing of the services of a SkillNet to do this, you're paying too much money. We can cut your cost of training by a minimum of 30%, and it's employers' own money. Employers out there listening to this are paying 1% PRSI into the National Training Fund. That's your money. If you're not availing of that money to discount your training offering, you're mad. You need your head examined.
Yeah, I would 100% agree. I think that if anybody is doing training at the moment that isn't being subsidized, or looking at from a SkillNet perspective, you need to reach out to either your local SkillNet or a SkillNet that you're the ISME SkillNet, or whichever ones are around there. I have always found everybody's really good to talk to. They have money to spend and want to help you. So it's a win-win for everybody. And like you said, you're paying into the 1% into the fund, so you might as well pay.
Yeah, it's your money.
So thanks very much, and thanks everybody for all your questions. Neil, it was lovely to talk to you, and as always, we'll send a copy of the webinar on to everybody as well. If anybody has any questions, please feel free to email me directly, or contact Neil through the website as well. So thanks very much, everybody, and we'll talk to you all soon.